welcome on board Vinay Paharia, the CIO at PGIM India Mutual Fund, joining us on the show. Vinay, hi, good afternoon. Good to be speaking with you. I wanted to begin by asking you what you make of the market setup right now, because the street is divided. One part says that you should watch out for a pre-election rally, while the other believes that despite these, mid-year gyrations, at the end of the year, we will be staring at only a high single-digit kind of return from the market. What's your take?
Hi, thank you for having me on the show, Anisha. So while we think, yes, the markets have delivered extremely strong returns over the last 1 year, we think that it is like a two-tiered market today. We have clearly seen companies which are good quality, high growth companies have actually underperformed the current market rally very significantly, whereas most of the weak companies, which means low growth and low quality companies, have actually delivered significantly higher returns. So I think there is a clear opportunity in this market for investing into such good quality and high growth companies. And I think we should be extremely optimistic about such investments with a medium term perspective. So I think clearly there are opportunities in this market as well.
Opportunities in the market, and perhaps it's time that quality will make a bit of a comeback. But talking about comebacks, last year was all about public sector entities. This year we've already seen quite a bit of re-rating for the OMCs. Last year, of course, it was the PSU banks that led the rally. What's your take on the public sector universe? Have you made any changes to your portfolio or your conviction towards public sector entities?
Sure. I think lots of public sector companies fall into a category which we are calling as micro bubbles, which are growing in the current market. In fact, we just discussed that markets are reasonably attractive and we are optimistic on a medium to long-term basis. Having said that, we need to avoid some of these micro bubbles which are growing, one of which is a lot of public sector enterprises. While some of them are indeed very attractive, good quality companies, but most of them are trading at valuations which are significantly higher than their intrinsic values. And hence, I would be extremely cautious in adding them to portfolios currently.
Yeah, but the problem is, Vinay, we have all been speaking about it for a while, but clearly it seems like the markets have decided to be irrational for a longer period of time than what you would expect, right? So that's what is happening right now. But what's your take on the earnings season so far? We have seen quite a few downgrades, to be honest. There were a lot more disappointments, at least from the larger entities, whether it was the banking universe or the consumption universe. Do you think that we have seen the peak of the earnings growth already, and now there'll be a steady de-rating of sorts?
So I would not say that we have seen the peak of earnings growth. As you rightly said, we have already seen weakness in banking sector's earnings growth. Banks have actually been impacted by lack of growth in deposits and liquidity squeeze. So I think clearly there is a potential for banks to see some sort of a good growth going forward. But you're right, on the consumer sector, we have clearly seen weakness this quarter. In fact, this was a festive period which was extremely weak for most of the discretionary categories, and hence I think we need to watch this sector with much more caution going forward. In fact, even the IT sector results were actually quite, in fact, they were much better than expected. So it's sort of a mixed trend. Some sectors have reported better than expected results, some weaker than expected results. Net, I would not say that we have seen the best of earnings growth this year. Yes, we could see some pickup in some sectors from next year as well.
Watch out for that pickup. So you talked about some of the micro bubbles which are there in terms of the public sector entities, and I know you flagged out real estate as that bubble as well. But which are those areas where you were talking about that quality hasn't performed? And if you had to make a pecking order in terms of the sectoral picks, what themes come to mind?
Sure. So within sectors like we are fairly overweight on healthcare sector, and within healthcare sector we are overweight domestic formulations. We are overweight healthcare services. So these are clearly two sectors which are very high growth and quality segments of the market, still reasonably valued. We are overweight financials, especially private sector banks and high growth non-bank finance companies. And we are also overweight consumer discretionary sector like auto components, QSRs, etc. So I think these are segments of the market which are currently have not participated much in the market rally, have historically done exceptionally well. They have extremely good quality underlying businesses, and we think that they should participate in the India growth story pretty aggressively going forward. And we are pretty optimistic on them.
Okay, on that optimistic note, Vinay, I'll let you go. Appreciate you making time and speaking with us.
Thank you very much.